Hi, this is Pat Moorhead. Welcome to this week's edition of the 6-5 podcast. I'm Patrick Moorhead with Moor Insights Strategy, and we are joined by my amazing, awesome, and always great to talk to co-host Daniel Newman. How you doing, buddy?
Doing good, Pat. Excited to be here. Back on Monday. What do we call this show? Elected for Earnings. I don't know, some clever play on the fact that we elected to talk all about earnings on the week of the election. But hey, a lot of earnings in the last week. A little bit more to sprinkle in too yet.
Oh, it is totally. And just a reminder, we are going to talk about earnings on this show, but this show is for information and entertainment purposes only. Contents of the show should not be taken as investment advice, but as you might recognize from the 6-5 name, we do cover 6 topics, 5 minutes each, unless Daniel and I like to talk too much, which, we pretty much go over every week, Daniel.
We do. We have a lot to say. There's a lot to say. I mean, Pat, these are big companies with a lot going on. A lot of this news requires a ton of analysis that oftentimes it's very hard to get across the interweb. So our goal here at the 6-5 is to provide the analysis that is often quite light in much of the coverage of these stories, but really telling everybody out there, all of our great subscribers and friends here at the 6-5, what is needed to be known.
Yeah, I love
known before you tuned into our show.
Yeah, and I love earnings as an industry analyst because it's the highest quality source of truth. As I always joke, companies lie less on earnings because they can get into a lot of trouble if they say something that is not accurate. So let's dive in with all limbs here. Let's start off with Microsoft. And, as we have seen from Microsoft, they had a tremendous quarter, Daniel.
Yeah, absolutely. And this is one of the earlier ones, came in the beginning of last week. And after Microsoft, we had a peppering of big tech earnings all in one day. And we'll cover all of them here. But Microsoft beat. And remember, Pat, right after SAP came in and sort of had a dud. It wasn't as terrible as the market responded to it, but it missed on its earnings and it brought a lot of questions into its cloud business. And Microsoft being in similar businesses, having a lot of direct overlap, people were thinking, market sold off a little bit on that. Well, Microsoft did not disappoint. Its estimate at $35.72 billion, company came in at over 37, and its EPS was estimated at $1.54. Company came in at $1.82. But that's all the news. You can read that stuff on your own. I was very impressed by the strength of its growth, double-digit growth in revenue, op income, net income, and diluted earnings per share. Company, for me, I was really dialing into 3 things, Pat. I was focusing on the business, the productivity business. I was focusing on the intelligent cloud business. And then I was going to focus in on the more personal business, not more insights, but more insights, more personal business, which is their gaming and Surface business. So I'll touch on them quickly and I'll pitch it back to you, Pat. But intelligent cloud up 20%, Azure up 48%. Everybody was looking for that Azure number. This number was good. Last quarter, 47%, this quarter, 48%. It shows still growing, well, a lot slower, but again, law of large numbers. The overall rev is definitely got to eventually slow in terms of growth. We'll talk about that more when we get to Amazon too. In the productivity side, the strength of Office 365 continues to plow forward. You heard an announcement of daily active users on Microsoft Teams up over 115 million, 11% in the productivity category. Now, Pat, one area that was really stood out to me was Dynamics 365, the direct competitive product to Salesforce. 38% growth in the cloud for Dynamics 365. And then lastly, Pat, the Surface and the Xbox, 2 impressive numbers in that category. One was the content and services. So not the Xbox themselves, but the content and services business was up 30% and Surface up a whopping 37%. Pat, Surface is going to challenge the MacBook for the ultra premium end of the personal device. My takeaway. All right. So much more I could say, but I don't want to take all the steam. So I'm going to pass that back over to you.
Yeah, I appreciate you leaving a little bit for me. And while we're not always in alignment on all these companies, I think we are on this one. Surface, as you said, up 37%. Its growth rate. I know everybody was giving golf claps for Apple being up 29%, but Microsoft eclipsed that growth. Different scale of businesses, but I think Surface is finally they found a business model that they could push the accelerator on. Azure steady at 48%. Server was off 1%, which finally makes sense to me. Server had kept growing at the same time Azure had, and I was always scratching my head on that big time. So I think you clean that out pretty well, Daniel. So let's move on to AMD. AMD is in the news, just kind of crushing it left and right, and they decided to pack their earnings in to the same time that they did the Xilinx announcement. I was up at 4 a.m. Covering this with you, Daniel. But listen, I mean, beats all over the place. I mean, they beat on revenue, they beat on EPS, they had record revenue at 56%. And no longer can I talk about the good old days when I was there, right? These are the new good old days. Record CPU revenue, highest ever notebooks and revenue, which while performance of a desktop and a workstation impress me, revenue growth in notebooks to me is more meaningful because that is where the puck is going. And in a lot of areas, it's where AMD is not necessarily well entrenched, right? They've proven to me on desktop, they've proven to me on server, and they're starting to prove their case on notebook. Record CPU revenue, 2x, and from my point of view, I always want that number to be 3x because I know where Intel is at 90+% market share, and I'd like to see AMD grinding it out at 3x. But we're analysts, and we can't always have flowers and milkshakes all the time. But I mean, how can you complain? They did great. They crushed it.
Rainbows and kittens, my friend. Yeah, look, last week, Xilinx was the story. So it was kind of like, oh, we're going to have earnings today, but we're also going to make a $35 billion acquisition. It was a big day. And of course, it started very early for us. At 56% up year over year, 45% quarter over quarter growth. That's a remarkable, especially because the company is continuing to hit critical mass. It has sort of rounded the corner. Look, I've been the most scrutinous of any of this company. What does it have left to prove? Well, it's gotten that low-hanging fruit. It's been able to win business in the wake of some of the difficulties in for Intel, some of the delays, but not just at the expense of Intel. Some of it has also been because AMD's done well. It's built a very loyal user base that enjoy the devices. That's led to more OEMs building more SKUs on the CPU and on the data center side, and that has equated to more users. And once users do start to flip over, there is a scale, right? One of the biggest strengths of Intel is the software. And when you are using Intel in the data center, moving off Intel is a big deal. But when some companies start to do that and start to use AMD instances, that does provide opportunity for growth. That could be with the cloud, that could be with the enterprise, that could be in high performance. So AMD has a place to play in all of them. One other thing, Pat, because you did cover a lot of this that I would like to mention is I was impressed by the confidence the company is showing going forward, actually moved its guidance up from a 32% year over year expectation to 44%. So that means clearly heading into its last quarter, AMD thinks its momentum is with it and that there's nothing that's going to slow it down, even despite all the hardship going on in the market. The company is saying, we believe we're on this track. We're going to keep this track. The only thing I'll watch out for, Pat, is you heard me mention with like Microsoft and Azure, the law of large numbers. AMD is still in the beginning of the law of large numbers. When you compare their revenues in any category to what Intel does, for Intel to show growth at that rate versus AMD, it's sometimes 10, 20, 30x revenue. And we all know that when Azure's growing 48 and Amazon's only growing 30, that doesn't mean Amazon's doing badly in cloud. It just means Amazon's a lot bigger. So there is always that balance in mind. People get really excited about growth rates, but I think you also have to look at the overall growth numbers. And AMD's doing very well, but can it keep growing at that rate into the next, next phase?
That's good stuff, Daniel. Good insights. And AMD has a chance to show at this point on how it does in GPUs, and we're going to be talking in our next show about Big Navi. But let's move to Amazon. 40% growth, just ridiculous numbers. I'll pitch this over to you right now.
Yeah, absolutely, Pat, and thanks. I know there's so much to talk about. I'll try to leave a little meat on this bone as well for you. Look, I started putting out tweets a couple hours before, and I said, don't be surprised if the beat is big, if there's going to be a big beat on earnings here. And Pat, there was a big beat on earnings. Now, you talk about large numbers, okay? Amazon is on pace to usurp $100 billion a quarter in revenue. I mean, just think about that for a minute. It hit 96.15 against the 92.7. So the revenue beat was significant, but the earnings, once again, estimates came in about $7.41. Amazon came in at $12.37. Humongous. But Pat, like I said, that's just the beginning of the story. Look, Amazon is the biggest winner without question, maybe barring Zoom, of the COVID-19 pandemic. People that never would have imagined ordering stuff have become prime customers. The company has basically eliminated every obstacle, whether, getting things down to one day. Almost anything in any category can be delivered now in one day on Amazon. It's crazy. The business has been very intelligent. But I'd also like to point out, Pat, that the company as a whole, while having been somewhat demonized for its growth during this period, has really been a hero to the market. I know this is strong, and I think you'll agree with me, but I'll pick a couple of things that I've noticed, right? Hiring, hundreds of thousands of jobs created amidst a global recession and an economic depression. Continued hiring, and not just low-paying jobs, but everything starting at $15 an hour and up to many, high 5 and 6 figure jobs, and jobs, by the way, in many markets, Pat, not just in Seattle, but anywhere. And so that's been a big thing. Sustainability. We hear a lot about climate change. The company has been steadfast. It launched a whole series of new devices last quarter and made a commitment to replacing its carbon footprint on every device, every Echo device it creates, matching in terms of a reduction in carbon footprint. So that was another example, Pat. I'll let you talk about SMB, because I know that was another area that the company's been really locked into. But here's the long and short. AWS also kept its growth rate at 29%, just 1% off last quarter, basically saying growth has continued. And actually, it was more revenue growth than the last quarter. I want to point that out. 30% growth. Remember, I said total number versus growth. They're 29% versus 30%. And Pat, $11.61 billion a quarter from AWS. Absolutely rocking it. Look, Amazon will always be scrutinized. There'll always be negativity around the company, but it was a great result this quarter and something that the company should be really proud of. And I see it sustained well beyond the COVID-19 pandemic.
Yeah, it's interesting. I don't know if it's my imagination, Daniel, but I see less haters coming after Amazon. And Amazon didn't communicate a lot about what it was doing, but now they're full steam ahead. And dare I say, they're creating some more believers out there. I think it certainly has quelled what I like to call as the haters, and the things that really mean a lot to me, Daniel. And again, you mentioned it, but these 175,000 new jobs since COVID began in March, at a time where small business jobs in particular have fallen off like a rock. And the company spent $4 billion incremental dollars in the quarter to be able to do this, and they gave away a $500 million thank you bonus. Now, that didn't go to one person. That would have been one big of a check, but it went across the board. And, whether it's supporting employees, investing in communities, environmental, small business, they've done a really good job. This quarter, they released their SMB impact report. SMBs have sold more than 3.4 billion products in the past year and have created an estimated 1.1 million jobs. And there's that jobs narrative coming in again. And I just think it's a big deal. But I'll echo your sentiments too. Company's not perfect. No company is. It's going to make mistakes. I can't believe it's not making more mistakes with this growth. I mean, if anybody's ever run their own business before, whether it's their own business or another business paid you to do that, it is hard to grow that much. And anyways, kudos to Amazon for doing that. So let's move into our next topic. And this is a company that Daniel and I are starting to talk about and take notice even more, and that is Polycom. It's companies like Zoom and Cisco deservedly getting a lot of credit, in addition to Teams and Google, for a lot of this COVID working styles remotely. But it's funny, one of the companies that doesn't get a lot of credit for that is Polycom. Behind most of those Zoom business calls that aren't on a PC is on Polycom. Polycom has a full line of products that don't just run Zoom, but run multiple vendors' services like Teams and Ring Zero, stuff like that. Anyways, let's get to the earnings. Huge pop in the market. They exceeded revenue. They exceeded estimates on EPS. They exceeded it on revenue and EPS. And the market rewarded them. They were up 10% on earnings day. They were up another 20% after that. It cooled off a little and then went, today it's up 10%. So something is going on there. I think a lot of it has to do with their new CEO, Dave Shull, a brand new president and CEO. Is a strong track record at the previous companies that he's worked for. A lot of experience in, quite frankly, a lot more margin challenged businesses and consumer than Poly's play, which is primarily in the business world. But very interesting, and I'm gonna be watching this pretty closely.
Yeah, so Poly, under the ticker PLT for its former parent Plantronics, which was the marriage of Polycom and Plantronics, so headsets and peripherals, company really well positioned in the hybrid collaboration space. So for people that are looking for the tools and peripherals, so like here on my desk, I've got this new Poly Sync 20 device. And this is a one button to Zoom, for instance, device that you can use for audio calling. Well, what we're going through now is this phase of remote work and fatigue and people needing other ways besides, the apps on our desktops to keep collaborating, to have high quality, the involvement of AI and ML to optimize, eliminate background noise, streamline communication, provide comfortable headsets to wear all day while you're in the office doing these calls. And so Poly's really refocused itself, and it's focused itself, Pat, on being partners with the market. So it's partners with Zoom, right. It's partners with Team, it's partners with GoToMeeting. It's building tools that enable its hardware to integrate and interact really successfully with these platforms. In the past, Poly had kind of tried to be a platform. It ended up getting away from that. So the numbers were good, Pat. The company came in actually below its former year revenue, but well above the expectations. And the analysts overall, including myself, tend to believe that it's on a trajectory of growth and that the company has sort of identified where it wants to play, where it wants to live as an organization. And that's why I'm encouraged by it. I think Poly could lock in and see growth because it's finally identified where it wants to put its effort, where it wants to put its investment, and it's tying itself to the growth of the collaboration space. And if it does so successfully, I could see a really strong future for the company.
Yeah, going to be a good one to follow, particularly with the new management team. And I saw something just cross the wire, new secretary and new communications lead for the company. So as you would expect, new CEO, new crew coming in. Daniel, let's move on to Google. Big Google here. The narrative the last 3 months were, where is the advertising market going to be, right? Typically, it follows with consumer sentiment and consumer purchases, and people weren't too thrilled with what them or Facebook did. But Google absolutely smashed it. I mean, 45% improvement in actually, no, I'm misreading that. Their revenues were up 14%. What am I missing here? Sorry, Google Cloud was up 45%.
There you go.
Which includes IaaS, PaaS, and SaaS. It's important to do that, but they did do incredibly well compared to expectations. People expected maybe up single digits, and they smashed it by delivering a 14% growth. Pretty amazing, I think.
Yeah, I was watching Google closely. I had the chance to go and jump in ahead of the earnings and preview them a little bit with Bloomberg. And I was looking for essentially, there's like 2 or 3 things really on my mind, Pat. First of all, always the ad revenue. Is it growing or shrinking? And where is it growing or shrinking? Seems overall revenue's up a little bit. Probably why the GDP overall has actually recovered a lot more than most people expected in this country. As business is moving quite a bit faster. And of course, some of these big companies are carrying a lot of overall weight in the GDP because we do know certain industries are still being held down. Airlines, hotels, certain retail places that can't open, restaurants, bars. But the big tech and enterprise and a lot of B2B things are doing really strong. And Google can sort of be an indicator of both. The Section 230 stuff is interesting for me to watch too. The Section 230 and the overall regulation of Google. It was kind of bizarre because, Pat, we talked about Amazon, we talked about Microsoft. Those stocks performed fairly badly after these earnings. So despite the fact that their results were terrific, the market didn't respond all that excitedly to them. And meanwhile, Google, which is the one that's being scrutinized by regulators, and its numbers were good, but not exceptional, actually had the best pop of all of the companies on earnings, which is really weird to me. I think the company is going to have quite a battle ahead of it, especially on its search business. I mean, the cloud business is a smart diversification for the organization. It needs to be in something else because I just have a feeling 90% control of search is going to be continually scrutinized, as it's hard to argue that it isn't anti-competitive in some way. And I look forward to seeing how Google does that. And then, of course, how information is suppressed. That could be a really interesting discussion. Politics aside, depending on which party sort of remains in the White House or ends up in the White House after the election. Then finally, Pat, I was looking at the cloud business. The 45% is good, but the more important thing was the breakout. Everybody's been waiting for this. Everybody's been waiting for Google, Oracle, all of them for that matter, even Microsoft to an extent, to all start breaking out earnings more to help understand IaaS, PaaS, SaaS. Where are you growing? Where are you succeeding? Because right now, when you sort of put it into one big lump, a lot of things become cloud that aren't necessarily really clear. So solid for Google. Good result. I like what it's doing. Hopefully, it holds its promise next quarter, delivers that cloud number, and delivers a good one because it could backfire really big if the result isn't good.
Yeah, not even hats off to them. I would like to see them even break out Google Workspace from the rest of their business. right? To see, again, I'm not as religious about, cloud, what's real cloud, right? I mean, real cloud isn't IaaS. I mean, it started with IaaS, and actually it started with IaaS and SaaS. If you consider Salesforce, I mean, they've been in business longer than Amazon has. So anyways, good stuff and surprising growth. Let's move into our final company, Apple. When they announced, their after hours, people were not impressed at all. It was down 5%, and it was primarily attached to disappointing iPhone sales. Pretty much everything else was up. Mac, iPad, wearables, and services, but iPhone was down. And I think that is a absolute reflection on the sophistication of investors who know that whether it's iPads, wearables, accessories, and services are pretty much all tied to iPhone. And you may say, well, the iPad's a stretch, but the reason that people know how to use an iPad so well is because they know how to use their iPhone. And if you look at the value proposition that says, if you know how to use an iPhone, you can use an iPad. So, now, I received a lot of hate tweets out there when I took this take. Yeah, I did expect it to be down because they were late with their iPhone 12. So to me, that was natural. But it was down a lot further than I think people expected. Will they bounce back? Yes, they will. The other thing that I think investors were disappointed in is that Apple got bumped down another peg on the market share ladder. Apple is now down to number 4, and Samsung is to number 1. Now, can they get back to that number 3 spot that Xiaomi took? It's questionable. I think Xiaomi is actually having a lot of success because they're taking a lot of Huawei business as it tanks. But all in all, a really interesting earnings for Apple. One final comment, Daniel. I'm wondering now, the services revenue has been super impressive. What happens if the regulators get in with Google, right? So Google search bounty that I think was supposedly $12 billion. Don't cite me on that number. Look that up. What happens to that number to Apple if the regulators get in and scrutinize that? Apple is, somebody leaked that Apple is working on their own search. Right. What does that do to their revenue? And the 30% store toll, which they derive $15 billion. I wrote an article on that on Forbes. What happens if regulators start scrutinizing that? So just some things on my mind.
Yeah, absolutely, Pat. I mean, look, Apple. The street has been harder than normal for the last few quarters on Apple. It's certainly not getting that same inflated. I mean, Apple had 2 events this quarter. Neither of them got quite the same pop in return that the company had seen in the past several years. The new iPhone 12, 5G is finally here. I think it was sort of a laugh from the market. Like you realize 5G's been here like a year, 2 years ago, but definitely a year ago. I mean, we were using 5G phones at the very end of 2019. We already had 5G phones. So that was just completely misleading. The other things, Pat, that kind of caught my attention too was services growth. Yeah, double digit, but 14.55, 16%. I mean, all this energy that's gone into the music and the TV for 16%. That's a good number if you're Dell, 16% growth. And I'm not saying that in a mean way. I'm just saying that's like if you're an OEM and you grow your server sales by 16%, that's good. When you're launching massive categories of service into this ecosystem that is always exponential. 16%, like I would think that some of these services should be growing 50 to 100 because they're not that big yet. I mean, not in the fact that you have this captive audience that you're tapped into.
It's captive.
You know, so the other thing too is Mac has been deflated for so long. So a 28% growth over what's been relatively a slow growing market for both Mac and iPad. Both of those have been pretty repressed. You look, I mean, the iPhone was somewhere between 3 and 4 times bigger than either of those categories for the company. And all the energy has gone into the iPhone. The iPhone is the center of the ecosystem. And Pat, I did see that same Canalys data point. Now 4th, and I think I said 5th could be very much in its crosshairs as another Chinese. What was the next one? Is it Xiaomi? Is Xiaomi the one that's just beneath them now, or is
Vivo?
Yeah, there you go. So the company, based on growth or stagnation, could end up finding itself as the 5th phone on a worldwide basis. Now, note, not US. In the US, Apple almost has half the market. So in the US, Apple has been extremely successful. But on a global scale, the closed Apple ecosystem has not been received the same way. And with our continued stress relations in China, and also the premium price tiers of Apple and the premium costs to developers, there's a lot of potential that the Android ecosystem could continue to really gain momentum. So I'd say Apple's in a cautious spot right now, Pat. Company needs to assert itself and grow, needs to focus on regaining the trust of its developer ecosystem. And I really think it needs to nail its Mac with these new ARM-based chips. I've been starting to spout what I said earlier about Surface, that I could see Surface surpassing Mac as the ultra premium device. Its growth is showing that potential, but Mac's next generation, I actually, Pat, one last thing. I think the Mac jump could have been people trying to get last dibs into the Intel versions before the new ones come out. A lot of people might have bought a Mac right before because they're nervous about this new chip. They're nervous, will the new chip provide the same quality, or would you rather, because a Mac's like a 3-year lock-in. You buy it, you keep it for like 3 years. People don't want to buy the new one. They're worried, is Apple going to get it right?
Yeah, it's funny. I vacillated between people trying to buy the Intel-based Macs before the ARM ones came in, and that and back to school. I mean, kids love. Kids in college seem to really like MacBooks. A lot of kids have them. I don't want to call them a toy because they're not, but I'm really looking forward to. I think the latest rumor is November 10th that Apple's going to bring out the new Macs. It was the 17th. It looks like that got pulled in. So I think that's going to be super interesting. So Daniel, I think we are at time, buddy. So I want to thank our audience for tuning in. If you like what you heard, press that subscribe button. Press that damn button, as I've heard some influencers say out there. Daniel, it's great seeing you, and I want to thank everybody out there. Have a great week.